What is Roaring Kitty going to do with this GME position? An article just came out that broke down all his different choices. And yeah, he has several of them. And I want to offer up what my prediction is. And then also hear what your prediction is. What do you think Roaring Kitty's going to ultimately do with all these contracts and position size that he has in GME? So let's go to the article and start to think about and look at these choices.
He has a choice. Will he wither or will he thrive?
So the article, Keith Gill, who is Roaring Kitty, has some tough choices to make on his Gamestop options. And this part is just savage, but true. Wall Street ready to pounce. Yes, Wall Street, they are watching this. They're going to try to take advantage of it. Absolutely. So let's just go through it. So the meme stock champion, whose real name is Keith Gill, has so far held onto his position of 5 million GameStop common shares and 120,000 call options. That is crazy. Now here's the key part here. His call options against GameStop have a strike price of $20 and an expiration date of June 21st. So quick explanation there. If the stock closes up above his strike price on June 21st, he would be in the money. What does that mean? Well, let's keep on going. So if that happens, then Roaring Kitty, again, who is Gill, could exercise the options at $20 a piece, allowing him to purchase an additional 12 million shares at the discounted price. However, many think he's unlikely he has enough capital to pull off such a move. Why? Well, for Gill to exercise the calls, he would need to have $240 million to take custody of this stock. And that math is just coming from 12 million shares bought at $20 a piece. And just to reiterate, if things go well and he closes in the money, he would have the opportunity to buy 12 million shares. But he's got to be able to fund that. He's got to be able to fund the purchase. And in order to do that, that's where that $240 million comes into play. Because you want to buy 12 million shares at $20 per share. $240 million would be needed. And I mean, don't get me wrong, his last screenshot showed he had $29.4 million in cash. Credit to you, sir. I don't have anywhere close to $29.4 million in my account, but for you math geniuses out there, hopefully you see a little bit of a problem. He needs $240 million, but he's only got $29 million in his trading account. Now it says he could deposit more money from other disclosed accounts. Now here is the problem and the dilemma and what I think is going to help kind of bail him out. So let's say he doesn't have the $240 million to exercise the calls. That means to buy those shares. As June 21st looms, his broker E-Trade may have to intervene by liquidating his options before expiration. So in other words, E-Trade basically just takes over, says, hey, we're doing with your position what we want to do with it. Now, I get it, that all sounds super sketchy, and in a way, I guess it kind of is, but this whole situation is exactly why that exists. And to be fair to E-Trade, when you join, they have something right in their client agreement stated that the brokerage may decline, cancel, or reverse a client's order or instructions at its discretion and without notice. And then the article also talks about how E-Trade probably wouldn't do without notice because he's got such a massive position and all these massive consequences. They would reach out and say, hey, what is your game plan? Do you have the money? If you do, then you got to get it, you have to get it transferred into your account so that we can see the money, so that we know you're capable of buying these shares. Are you going to sell all these options beforehand? Because 120,000 options to sell, that's a big position, and the article says how their risk team, I believe they called it, would help him basically dump the position and dump it in a way where maybe, just maybe, the Wall Street big fish don't quite notice and they're not able to quote unquote pounce from the title of the article. So all these things are in consideration, but it's not like he can just go out there and press sell for 120,000 call options. People would notice that and people would start to leverage that to their advantage. Another choice, is selling early. Theoretically, Gill could start selling his calls early to turn a quick profit and avoid the drama in a week and a half. But many argue that it's not a good look. He definitely has the public perception that perhaps to some degree stopping him from selling because then he would definitely be marked as a manipulator. Kind of a modern day pump and dump scheme. I mean, kind of. No, that would be totally a super bad look. He has built this following. He has all these people just, I would argue, blindly following him. They're doing it just, I mean, it's not the most serious thing out there, which makes this all the more ironic and crazy. But yeah, he's got a big following. And what would that look like? What would that do to his perception? What would that do to people's attitudes if they find out, wait a second, you dumped everything before I thought you were here. I thought you bought those options because you thought it was going to be in the money, but that you then slowly dumped out over the past few days. I mean, things get a little squirrely. I could see that upsetting some people, and people probably want to hunt him down.
Dead or alive, you are coming with me.
And then he could also roll the options, which is essentially a way to give him more time. But as the article points out, it's not something you just want to sit there doing on your laptop in the last hour. It's too big. Again, if he's in contact with them, it would be in his best interest to begin working with their risk teams and trading desks if rolling is his plan. Now, again, I don't want to go too far down the options rabbit hole here, but overall, rolling, like I said, just means he's giving himself more time. He's kind of pushing the decision-making process down the road a little bit further. He's kicking the can down the road. But that's not an easy thing to do. And as our article points out, you don't just do that like with a couple clicks of the button. That takes forethought, that takes planning. And to give E-Trade credit, it sounds like they would reach out to him. They would try to work with him to help him get that job done because, again, just doing it from your laptop, it's not quite that easy when you get to these proportion of positions. And then the other thing he could do is if he just flat out holds the options to expiration date and the stock actually falls below 20, this position would expire worthless and it would cost him more than $60 million. So those are the choices. If he closes in the money, have $240 million to buy additional 12 million shares at a $20 price, that's one thing. Or he could just flat out call or sell the call options before the expiration date. And that's the one where I could see that upsetting people. I could see that one making regulators say, that looks a little bit like manipulation. You pump this thing up and then you dumped all your call options. So that one looks pretty sketchy. You could try rolling the options. That one's kicking it further down the road. And I think that one, that's not really accomplishing much. So I don't see a whole lot of benefit in that one. And then of course, or you can just hold and hope. And if it closes below $20, he's essentially out $60 million. So what do I think he's going to do? Well, I think E-Trade and their little, their client agreement gives them a nice little out. I think he is going to sell his call options beforehand. But I think he's going to let E-Trade do it. And then he can say, whoa, E-Trade did it. They did it at their discretion. They did it without warning. They took over my account, which again, they're allowed to do. But he can sit there and say, they sold them all, not me.
I don't know what you're talking about. It ain't my fault.
And then he conveniently makes a whole lot of money by selling 120,000 call options. He gets to basically throw E-Trade, throw Wall Street, throw, the big banks, whatever you want to call it, throw them under the bus. That wasn't fair. They took that and sold that. It wasn't me. I didn't want to do it. That's what I think he's going to do. Maybe I'm totally wrong, but at least cut me a little credit. At least I'm throwing my prediction out there publicly, and we'll have to see what happens with it. But what is your prediction? What do you think he's going to do amongst those choices? I'm curious to see what other people think he's going to do. Yeah, it's very, very interesting. He's got such a massive position that now if he does have $240 million, this all becomes kind of a moot point. I'm not quite sure. I mean, maybe he has $240 million. I don't know that. If that's the case, well then I'm going to be wrong because he'll probably just go and buy the shares and be done with it. He'll save his name. Everything will be fine. But like I said, it all kind of hinges on that's another question. Do you think he has $240 million? So let me know down in the comment section down below. But yes, that is my prediction. He's going to let E-Trade sell his call options for him so that he can throw them under the bus, play the victim card, say it wasn't me. That way he saves credibility with his massive following. He makes a bunch of money, but we'll have to see what ultimately happens. So like I said, let me know your thoughts down below. Let me know your prediction, and we'll see what happens. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.